go.
Now we're live. Man, oh man. It's been a while. This one's a bit spontaneous. Like, you just texted me, bro, you want to do a live? And, all right, here we are.
We back in the game. Like we never left the game, but we had
I
to
mean,
take a little bit off.
it's impossible to leave because uh, markets are a little bit like an addiction, which might not be a good thing. That you can't really stop watching markets. You can't. It's basically impossible to really get out because even if you're not taking any trades or anything, you're still following every day, or you see what's going on. You follow what's going on. So yeah, but here we are now, and it's again since the last podcast we did or since the last live we did, man, so much shit going on is again like oh man.
Yeah, bro, like after March, the beginning of the war, the first couple weeks, like I would also say the beginning of April, um, it was hell on earth if you are an active trader. So for me, what I have done, I sized down and to be honest, like I took a little bit time off. I didn't put a lot of risk on the table because the direction of the market was not clear. The only thing was in town is the memory play,
Hmm.
and it was so quick, like it happened in 4 weeks, 3 weeks, that call skew got too expensive to join the trade, and shorting it, it's also like shooting yourself in the knees. So I decided to take the time off, like staying in cash, just watching the markets. And when I saw some tactical opportunities, for example, being long the dollar after the Fed meeting, I took it against the Norwegian krone because the thesis was oil coming down, which is they are long on their balance sheet because they are an oil producer, and being long on the dollar because of interest rates differential was a good one. But yeah, overall, it was just one play, one trade.
Isn't the Norwegian what's it called, krona or whatever,
Exactly.
aren't they also tied to shipping, or is it am I like messing that up? No, I'm not.
Yeah, no, you're not because they also, if you look at their geo position, geographical position, they are also a major checkpoint for shipping companies or for export and import from there. But it's another topic, so I don't want to get into the shipping stuff. We had talked yesterday about it. Um,
Hmm. It's
Crazy.
fucked.
Yeah, crazy. So, any
I
trades
mean,
from
like,
you? Like,
I
did you
mean,
take any
no, no,
trades
about
overnight?
like about shipping and so on. In these crises, there's a lot of money to be made, but there's a reason why it's expensive and why it's risky. And
Yeah,
the risk is not only on paper.
yes, exactly. It's not only on paper. But yeah, man, like, let's start talking a little bit about different assets. What do you think about the S&P right now?
Man, I don't even fucking know, bro. Like, the problem is that it's so concentrated again. The only thing working is AI, memory, and so on. Like, to be honest, if you really want to perform in this market, you have to be a specialist in like this AI tech stuff. You have to know where the trends are going. And for me, that's not it. So therefore, in equities, I'm far out. I I don't know. I had a trade in agro actually. You remember AGRO, which
Yes.
is a business. They're agricultural business, but they also have a fertilizer business now, which they acquired recently. I sold a put there, like went like yeah, but nothing too crazy. The only thing that I think was a good trade, where the consensus, which was going against the consensus, was long oil. Like when oil dipped back to like pre-war levels, it's just insane. Like it does not make any sense that we would have gone back to pre-war or basically back to like end of February levels if the situation is not resolved. And now the situation in terms of storage, in terms of like the supply and demand um, kind of dynamic is even worse than back then, because there is no more like, oh, we have so much storage that it doesn't matter anymore. Because now, now like it's already been I don't know, 3 months, 4 months or so of storage drawdowns, and saying that okay, we can just go back to the prices of before does not make any sense. So I think it was an obvious trade, but a lot of people, because the consensus was like, okay, oil is going to go back to 50 or something, or back to 60. That was kind of the consensus because we saw this crazy move down. But same thing, like everything that moves up in a crazy way also moves down in a crazy way, and kind of on the same way, if you turn it around, if we see such an insane rally, an insane sell-off, then there's gonna be a bounce. And if the bounce is because okay, now everybody's long, everybody's short, and we might see a mechanical short squeeze, or if it's bounce on news like now what we saw with oil. So I think it was an obvious trade. I'm glad I took it, but at that time, of course, was more difficult to tell. But then also gold. I think gold here in this kind of consolidation range is a good one. I also took a long here on the GDX, like a bull put spreads, and yeah, man. But other than that, equities, it's difficult, man. I
Like
do not really know.
the S&P has been trading in a range since the beginning of June, basically, and this range trading was caused by a hawkish Fed. Like Kevin Warsh wanted the market to do the tightening for him by being hawkish. So if you look at financial conditions, I have a specialized model for it to model financial conditions, looking at different variables who have been contracting for a while, which then caused the RSP to start outperform. Like we start seeing breadth outperforming the SPY for a couple of weeks. But now this re-escalation, or this small re-escalation in between Iran and the US, is causing a move back into concentration into the S&P, which is very tough to trade. Like I have been talking about this. I wrote a couple of chats here and there, and I told you a couple of times, I don't think the opportunity is by being directional. I think the opportunity is by trading relative value, like spread trades. But it's also very tough to find the right asset in the current market regime to build a spread trade on. So for equities, I think if liquidity starts to move again to the upside, especially today was a good day for global liquidity, because we had lower than anticipated inflation reading, which then pushed the yields across the curve lower. That will loosen financial conditions a little bit. So this is why we see risk assets such as Bitcoin and even the Nasdaq, the IWM, everything is green on the day.
Especially like liquidity assets like Bitcoin.
Exactly. So for me, if we start to see liquidity, I'm long Bitcoin at 60K. I posted the trade. I am long gold at 4K. I think gold 4K should be reasonable. I'm also to add at 3,800, because I think this move in the dollar is false breakout, even though I'm long the dollar, but I'm very cautious. Like I'm trading my stop. I took profits on the trade I mentioned earlier, and I think Warsh will flip very quickly after the market has done the tightening for him. He will flip very quickly dovish without even anyone anticipating it. And that's the problem. By removing the forward guidance, you're basically increasing the volatility in the interest rates market, which
because the
has
market doesn't know where it's going, and then
exactly.
yeah.
The market doesn't know what's gonna happen next, so a lot of speculation gonna happen, a lot of volatility, a lot of uncertainty, and as a market maker, you have to widen these distributions by increasing vol. So even the market reaction to each economic data will be very volatile. On the interest rates side, if you look at it today, like the 10-year or the 2-year, especially the short term, the short end of the curve, it's down 2.2% today, which is a big move.
Yeah, for like yields, yeah, it's crazy.
Exactly. It's because they removed the forward guidance. And if you look at the move index, the move index is up like by 11% today. It's positive. It's something new. We have to get used to it, but it has its disadvantages because when collateral is very volatile, a lot of hedge funds will have problems with basis trades, for example, because the number one condition
So
for
would you
such,
say
yeah,
if you find a way, okay, I'm gonna play the move index, would you say, okay, on the long run we're gonna go into a more bond market volatility, more volatile regime? So would you say, okay, for a long-term trade, the move is a good long as you take this index, or any other way
I
to take
I
volatility
I am
regime?
already long the TLT. I went long at 85, and I did cover a lot of my position to be risk free via calls, and now I'm still holding into the position. Like be long convexity again. Don't be long shares if you are going to bet on higher vol. Try to be long calls. Don't go
But
far out of the
but to
money.
isolate it,
Yeah,
like to not have a directional move, okay, I'm betting TLT is gonna go up or down or whatever. I'm not gonna bet on how
diagonal
many interest.
spreads, like
No, but
short-term volatility. Yeah,
But what I'm meaning is being long move, because you were just saying that, okay, since they removed the guidance, market's going to be more volatile in the interest
mm.
rates and so on. So if you don't want to bet on the direction of, okay, rates are going to go up or down, would you say, okay, on the long term, since they removed the guidance, this is going to create more volatility? It's a good trade to be long the move index, for example.
Being long the move index is the same as being long VIX. We have tried it multiple times. It's not an easy one because the spreads are on the VIX, for example, are very tough. So what I would do is maybe take a long call on the short-term interest rates market, like betting on cuts. And as long as volatility expands, the call has its own vol measurement, or be long shy in the shy ETF, which is
Yeah,
the
I was about to say the
1.3
shy.
exactly via calls, and you have this convexity and volatility within it. You talked about gold. For me, as I said, I'm long at 4,000. I'm looking to add because, as I said, I anticipate the Fed all of a sudden to flip dovish, and then gold would perform. So I'm accumulating a position. 4,000 to 3,800 is my zone where I want to accumulate a position. On oil, I'm also long with you.
Yeah.
But it reached my target. Like I was anticipating 75 to 80. So I did cover a lot, and I'm keeping the rest now to see if we can go higher.
Yeah, I'm saying that there's no resolution here, and now for me the market looks worse than it looked before. So it could go even higher than what we've seen before. You know, like
Yeah. So we're
this peak
calling.
of 120. It's
Oh,
I think it could be that we break that, because
oh, that's crazy,
market
man.
is more fucked than it was before the war, and now the market was pricing in, oh, we're back to no war, back to war's over, but the war isn't over. You know,
That's crazy. So you think we're gonna get to the highs on oil?
I'm saying it could be. I'd say I'd say
Crazy.
we rather go there than back to 55 or 60.
Okay, interesting. Like you say, it's more likely to see oil 120 than 50 or 60 in the short term.
Yeah,
We'll
yeah,
take
for
that.
sure. Because
We'll take
the
that.
the problem is that the conflict is not resolved. Like the this MOU, this understanding, this ceasefire that they had, it was all dependent on like Trump and Iran being in an understanding and having that stuff like match with each other, like saying the same thing. If Trump says, "Oh, they're not gonna charge tolls on the Strait of Hormuz," but Iran at the same time says, "No, Trump said that we can charge tolls on the Strait of Hormuz," then there's no agreement and there's only further escalation. So, and for me, it also seems like Trump is not too much of the guy to back down and like take a shitty deal. Uh, Even like he was trying to take a shitty deal with this MOU, which was basically like a Iran dictated deal, but even that did not work. So I think there's more escalation coming.
Okay, so I'm perfectly fine then in my oil position because I just covered my risk and I'm letting, like for me right now, I try to cover my risk and let the trades run risk-free, especially in
Yeah,
this market environment where it's like very tough to have a read on the market. Um, okay,
yeah,
let's move
just
further. What
yeah.
do you think about copper, man?
Oh, well, unfortunately, my copper trade worked out and it expired worthless.
Then
But
why, unfortunately,
yeah, because I'm not in the trade anymore right now. You know,
why didn't you
we
roll
saw.
you could have rolled the puts like that you have sold.
Yeah, like we saw this like little dip, which was a good opportunity to go long again into copper. But me personally, yeah, unfortunately, I did not roll them. My position they expired. It worked out, but yeah, I'm still long, like bullish on copper. Just unfortunately that I'm not long right now. But I'm looking to get into it. Yeah,
Yeah,
but for
I,
me, it's also like it's always a difficult thing if it's already run that nicely to find a new entry again. If you've had a trade that has worked out nicely for you and you want to get into it again, but you don't want to be chasing it, so it's more complex than getting into a new trade, for example. Yeah,
I totally agree. I'm also long copper, bullish copper, but I'm not long, unfortunately. So,
yeah.
okay, let's move further. What do you think about? We talked about metals, like silver is going to be destroyed if the dollar continues to go higher. Oh man, what's your opinion on SpaceX? SpaceX.
SpaceX. I mean, yeah, it's a shit company, bro. Like the IPO, I man, I remember there was like a party. I was talking to some friends who were like, um, "Oh, I want to invest into the SpaceX IPO. What do you think?" And I was telling them, don't do it. IPOs usually pop and then they sell off. And if you really want to invest into SpaceX, then wait for the sell off, wait until the market finds a fair value, which usually, yeah, the IPO price, it opens here, goes up, and then we sell off. And then afterwards, after the sell off, you find a fair value of it, you find a reasonable price. But on SpaceX, I think the reasonable price is not where we are. Like, I think we're at like 100 times sales or something. And they would argue, oh, we're an AI company. It's not the right thing to look at and whatnot. But it's not like a Palantir, not like a software company where sales basically equal profits, but it's a hardware intensive or like a capital intensive business with like all their space launches, all the capital they have to deploy for the data centers and so on. So SpaceX is definitely not a company that should be valued at like software multiples. So I would stay away from it. Like during the pop, there were people and I thinking about shorting it. It was difficult because who knows where the shit goes. Like Wall Street, clearly they have an incentive to push the price. You want to know why? So
Explain the dynamics.
so uh, I was looking, like I saw something interesting, some comment on this. It's similar than in to the dot-com bubble, because in the dot-com bubble, everybody wanted to do the IPOs, everybody wanted to get the investment banking fees of underwriting some new company, some dot-com shit or whatever. And it's the same thing with SpaceX. For example, they, like, I don't know, Goldman Sachs, Morgan Stanley, or whatnot. They all put like targets of like 300, or I think somebody even put an $800 target on SpaceX. Um, the thing is, if an investment bank also has a equity research like branch, the equity research brand obviously can't talk shit about the company they just IPO'd, because
Exactly. Yeah.
firstly, SpaceX, they IPO'd and gave like huge business to like these investment banks. Like you get 1% or 0.5% fee of the whole total proceeds or some shit. So it's many, many, many millions that these investment banks profit off of this IPO underwriting. And I believe SpaceX, they said in their prospectus that, okay, that now they raised, I think it was 85 billion or something, but they have to raise until, I don't know, some date, I think about 220 billion. So there's still much, much more money to be raised. And for that money, there have to be like investment banks that do like underwriting, made like maybe like more share offerings or debt underwriting. And of course, these investment banks, Morgan Stanley, Deutsche Bank, and whatnot, they of course can't talk shit about the company if they still want their business. So yeah, these analysts, man, it's a little bit corrupt. It's I wouldn't, generally, I would also never really trust that much. Yeah, but so therefore, SpaceX, if you hear somebody, oh, Goldman Sachs just issued a $300 per share target, that's more than 100% upside. I would be careful with that, because there's clearly a conflict of interest.
I was thinking about selling the 150 puts, but then they were trading at $13. But then looking at the liquidity conditions, man, and this synthetic tightening, it's a risky asset, so I backed off. And especially with that debt laundering that Elon Musk have done,
Yeah,
I'm not interested.
yeah. I
So
think
it was
SpaceX.
I think we will look back at it couple months ago, in couple months, or in maybe couple years, and we will see that the top of the market was the IPO of SpaceX.
Hmm,
So man, it's again, it's tough environments. I'm very, very tactical and in very niche. I'm trying to play it very safe. I'm not going big in positions, but
mhm.
the overall market, especially now entering the summer, man, we know like July, August, the market usually is dead, given that everyone is on holiday and things slow down usually,
Yeah.
even in the real
What
economy.
one trade that I took, which I think on some of our old podcasts I talked about it, is Zim. It's a lot. I talked
Yes.
about it a lot, because the story, it was simple. Back when I was trading at like 15, I went long because it was just undervalued. Then there was like some merger, like buyout rumors. Then there was a bid by a German shipping company. To buy out the whole company. But that now failed, because the Israeli government is completely against it. Uh, is completely against selling Zim, because they say it's a strategic asset. It's a strategic shipping, whatever. They need it for national security and so on, and therefore there's no M&A to be done. Uh, which, first of all, anybody would think, oh, it's fucked, because the stock popped because of this M&A deals, because of these rumors that, oh, they're gonna get bought out for $35 per share or something. But now the old CEO, Eli Glickman, because who I believe should be in jail, because this guy, man, he like obviously wanted to push down the stock price in order to buy the company at a cheap price. So like he would tried to do, or he actually tried to do management-led buyouts, which did not work because like there are some other bidders for the company. But this CEO, he's gone now. There's a new CEO who came in, and now the company can focus back on their business. Like no more M&A shit, no more like CEO that wants to destroy the value of the share price in order to buy it himself. So I think this company can pay a lot of nice dividends. And with these shipping disruptions, shipping rates should remain high. So I entered back into it, not as big as a position as I used to have, of course, because I had a huge position in it. But yeah, I took a new trade here in this one because yeah, the M&A story is over, and this might seem like a negative, and that's why the stock has sold off like in the last few weeks, or actually since the middle of February. But now I think there's like a clear path ahead that the company can follow on. So yeah, that's actually a new trade that I took.
I remember it was the biggest trade of your career.
Yeah, definitely.
So yeah. Okay, T. One last question. If you have to take one position, one asset for the rest of 2026 and go to sleep, what would it be?
Man, oh man. Okay. I have to think
One
about it.
position. Like you can take two assets, build a spread trade or a hedge. What would it be?
I would say long gold because I think even if they will hike, even if the Fed will hike, like Walsh will hike, he will only hike in order to cut again, because his job is to cut rates. Like there's no way around it. No matter how they argue, no matter how actually they have like good economists and so on their team, and he's a respected economist, his job is to cut rates, and therefore I believe that gold should perform. And the oil thing is not going away, so high inflation is gonna keep being a problem or a theme. And I also believe that a lot of the speculative hands have been like shook out of gold because like this crazy rally, we had a big pullback, and now only like actual like proper people who want to stay in it and don't care if the price drops that much, not the speculative hands, are out of it. So I think gold could be pretty solid. I'm not saying that gold will outperform everything else. I'm not saying gold will outperform, I don't know, the DRAM sector or whatever. But I think it's a good one currently.
I would say the same. I would be long gold, but also I would take long TLT as a hedge because I think being long gold is going long the debasement trade, and going long TLT would be going long the recession trade. So if shit hit the fan, and if the even if the Fed is
Recession
hawkish,
trade.
yeah, exactly, a recession trade, because productivity we have been promised to see, given that we had AI for over like now 4 years. Like GPT came out at the end of 2022, so 4 years into this, everyone is promising productivity. All these major big companies are now, most of them are negative cash flow, so they are not cash flow positive. So at some point the capex is gonna slow down.
Yeah.
And don't forget, like they issue corporate bonds, and all of the issuance, like even the spreads, are tied to the long end of the curve. So if they don't control the long end of the curve, even capex issuance will have to struggle, because within the credit spreads there is a the 10-year component. So I think TLT and long gold as a trade, like as a hedge. If shit hit the fan, or perfectly hedged. If the Fed is hawkish, you're perfectly fine with TLT, because this is what the market is willing to hear right now. A Fed that's responsible. They are willing to fight inflation, not like Powell Fed. So even though Warsh was hawkish, TLT did perform very well if you look at it, if you look at the chart. So we back to the beginning of 2025 where I said TLT and gold, man. So I don't know.
Every year we're back to the same thing.
Every single year, man, we back to the same thing. And yeah. You want to add anything?
No, I'm fine with that. TLT sounds good. For me, TLT is too boring though, man. It's always so slow. It's monthly dividends and we have like 0.2% moves and
Yeah, right.
no, but yeah, I think it sounds good.
We could talk before we end. We could talk a little bit about vol. We have been seeing a lot of vol dispersion. We're still in a high vol ranging market where
Which it
realized
wouldn't
vol is
seem
like,
like if you look at the index level.
yeah, on the index level, it's a high vol ranging market. On the stock separate stock level, it's going crazy, man. Call skew is everywhere is expensive. Volatility is too expensive everywhere. On Intel, on Micron, on SanDisk, and this move down in these memory stocks, it's caused by the Kospi, man. Like because the Kospi has more, like over 50% of its weighting in SK Hynix and Samsung, and they produce these memory chips. So once we started to see deleveraging taking place in the Kospi, that has its spillover effects on the rest of the market, on the global markets as well.
I mean, which we're already seeing. Like the Kospi is down, let's see, 25% or something from peak to right now.
And
so
the peak is like on the 19th of June. And if you look at it, the peak in Micron was after earnings, but the peak in SNDK, it was like on the 18th, 19th on June. So quite tough.
Well, okay, man. So with that being said, was just a quick one talking a little bit about what's going on. And of course, as always, any questions, just let us know.
Exactly. And then trade safe, guys, manage your risk, and see you next time.
All right. Bye-bye.
Bye-bye.